Hello, good morning. It's Thursday the 30th. I'm FX Blue and this is the morning brief. So the sterling rally continues as the dollar barely reacted to yesterday's Fed meeting. Do we have further to go? Well, some are calling it close to fair value where we are, as we were last at these levels only back in March this year. And to put that in perspective, the recent euro high was last seen nearly 2 years ago. So that rally arguably is looking a little more fragile. Regardless of how much Andy Haldane's comments helped when he originally suggested the V-shaped recovery was underway in the UK, recovery does look to be going better than the US or the Eurozone at the moment. Yes, there are still headwinds to compete with the current buying interest, such as, of course, our good old friend Brexit and the no-deal risk, and those simmering tensions with China. But sterling does look to be benefiting from the apparent foresight over a second spike in Europe. And yesterday we crossed 130. We actually touched a high of 130.05, but we couldn't hold on to the gains, and we opened today around 129.65. The Fed meeting ended as expected, with rates left on hold. Powell noted that the economy has turned around since March and April this year, but he is still concerned about how the virus will dictate the speed of the recovery. Fed programs will therefore be kept in place until COVID is behind them, and Powell expects prolonged help will be needed to avoid a long and damaging recession. So it looks like that's set to continue for quite some time, as many states have failed to get on top of the pandemic and the economy has certainly faltered. Unemployment remains a hot topic in the recovery story there, and tomorrow's weekly jobless reports will show if the previous rise last week was a blip or the start of a trend. It's still also on Congress to decide what to do about unemployment support, as the first round of support expires tomorrow. There's still been no official word yet, and it looks like there will be a deep cut in that level of support. Over in the Eurozone, the ECB has banned banks from paying dividends, and this means that there's no share buyback or excessive bonuses either. Thank you. Poor old bankers. Couldn't happen to a nicer bunch. The Eurozone has dealt with the pandemic better than the US so far, and that has helped the euro-dollar rally from around 106.30 in March to over 118 yesterday. But the second spike could affect the performance though, because if it takes hold again and the tourist season is wiped out, that pandemic relief fund will look like a mere drop in the ocean, potentially dark clouds on the horizon. Not today out here though, glorious day and the sun's shining, and I hope you have a wonderful day. Join me again tomorrow.
If you do not have a clue, then just tweet through and ask FX Blue.